Hello everyone, my name is Nathan Corroy from Richardson Capital Management, and I'm joined today by Dan Brown, our Director of Investment Management. And we are here today to provide the economic and investment update for the month of November 2024. Well, Dan, it goes without saying that certainly the biggest news event in the month of November was the election that we had here in the US. And while we kind of ended the month of October with a bit of uncertainty in the financial markets, not knowing how things would shake out in November, what we did get in this election was a clear outcome in the election. I know one of the major concerns that a lot of market participants had was, this fear that we'd get into a contested election type of a situation, but we got some clear certainty. You want to give a little bit of background on what we saw kind of immediately after the election and since then through the month?
Sure. So investors reacted very positively to the outcome. And as you mentioned, I think the primary reason for that is because we had a certain outcome. It wasn't going to be contested. And then as investors evaluated the agenda from the new administration, I think they kind of came down on the side of that it's a pro-growth agenda. It's still very early days as far as decision making is concerned. But overall, like the previous 4 years of 2017 through 2020, I think investors came to realize that it's going to be lower taxes, less regulation, and more efficient government spending. And again, investors realize that's generally going to be positive for stocks.
Got it. And Dan, given that positive market reaction to the election outcome in November, we saw the major U.S. indices hitting all-time highs during the month, which has brought into focus another key issue that affects the market, which is interest rate policy in the Federal Reserve. We did have a Fed meeting in the month of November. Do you want to shed a little bit of light on what we saw during that meeting and what our expectations are going forward?
So we had another interest rate cut from the Federal Reserve. So just to recap, we had the first interest rate cut from the Federal Reserve back in September, and that was a bigger jumbo-sized cut of 0.5%. And this time around in November, we saw only 0.25%. Okay. So, and as we look out into December, when the next Fed meeting is, right now markets are pricing in probability for another interest rate cut of a quarter point. And then as we look out into 2025, probably think that, four quarter point cuts is probably in store. The Fed made it very clear at their November meeting that interest rates at their current level are still restrictive, but they're going to take a slower, more cautious approach into 25. But we're fully expecting interest rates to kind of level out here when the Fed is all done with their cuts in maybe the third or fourth quarter of 2025 for a Fed funds level of about 3.5 to 3.75. And we think that'll be constructive for stocks. So we anticipate that will continue to be a tailwind for stocks into next year.
And Dan, with the equity markets at or near all-time highs in the month of November following the positive outcome from the election and the outlook on Fed rate policy, a key concern from a lot of investors is probably, are we getting too far ahead of ourselves? Is the market overvalued? And when we think about equities, what that really comes down to is, what do we expect earnings growth to be going forward to justify the values that we're seeing today? What are you seeing, in that regard on earnings going forward?
Yeah, so as we look out into 2025, one of the things we're looking at, one, valuations, as you mentioned. And again, as you mentioned, they're very high, historically high. So we're not expecting a lot of multiple expansion, for PE ratios expanding further. But when we look at underlying earnings growth, we see a very strong outlook into 2025. So the graph we're showing shows both revenue growth or sales growth, and then also earnings growth. So we're looking at a quarter by quarter for 2025, and for the full year, we see that expectations are for about 5% revenue growth and close to 14% earnings growth. So we think that's maybe a little bit too optimistic, but even if earnings growth doesn't come in at 14% and it's in the high single digits, say 8 to 10%, we still think that's a positive catalyst to push stocks higher into next year.
Sure. And Dan, as we head into the closing month of 2024 and look forward into 2025, we've got the various positive tailwinds that we've talked about with, election outcome, federal rate policy, the general economic strength that we've really been talking about all year. We obviously have to pair that with some of the potential risks out there, namely probably the, some policy risks out there with things like tariffs and immigration reform. If we put that all together, would it be fair to say that we're cautiously optimistic going into next year? And what are we doing with the portfolios with that in mind?
Yeah, I would say that's fair. And if you've been listening to these videos for a while now, we've had that same constructive tone for a while. We think that'll continue into 2025. And what that means for the portfolios is we made some minor tweaks to the portfolio in the month of November. So for some of our more aggressive or growth-oriented portfolios, we move those up, the stock allocation that is, to our long-term neutral target. So increasing that stock allocation by just a couple percent. And then as far as that stock allocation is concerned, it definitely favors U.S. stocks over international stocks, which have kind of struggled here over the past year or two. So again, still an optimistic outlook, bringing our neutral target for stocks up to the neutral weight.
Sure, great. And with that, we'd like to thank you for watching. Certainly hope you find value in these videos, and if you do, feel free to share those with friends and family that you think might enjoy them as well. As always, we want to sincerely thank you for your continued trust and support, and we look forward to working with you in 2025.